Hey, David Krasinski here from DK Home Loans, and I have some exciting news. If you're looking to purchase a home right now with less than 10% down, you really need to take a look at the FHA loan. The reason is that mortgage insurance premium that you pay every month was recently reduced significantly. Now you might be asking, Dave, what is mortgage insurance? I'll explain. Mortgage insurance is a policy that protects the lender against losses that result from defaults on a home mortgage. FHA has both upfront and annual mortgage insurance for all borrowers regardless of the down payment. Now, upfront mortgage insurance is 1.75%, and that's based off of the loan amount and will typically be financed, so you won't be paying that upfront. The monthly mortgage insurance premium that you do pay every month is now 0.55% of the loan amount on an annual basis, which previously was 0.85%. Now, what does that mean, Dave? Well, let's take a look. Here in example 1, we can see what the old premium was. Now, this is based off of a $450,000 loan amount. So you can see it's $306. Well, what does it drop to? $198, which is almost $108. Actually, it's over $108 per month in savings on a loan amount of $450,000, which is pretty significant. That's probably equal to $25,000 to $30,000 more on a home purchase price than previously before the reduction of the mortgage insurance. Here's another example. This is on a $400,000 loan amount. You can see the old number was $272 per month. The new number is now $176, which is $96 per month. Here's another example. $238 on a loan amount of $350,000. The new amount is now $154, which is an $84 per month savings. Now, why would I want to use an FHA loan, Dave? The reason is that we're noticing the FHA is actually a better, cheaper loan right now than a conventional, even with borrowers that have as high of credit scores as 780, even higher. So, what does this mean? This means more affordability. This means that when you go to refinance, most experts predict that rates are going to go down and you're going to want to refinance. You can do a streamlined refinance with an FHA loan, which is easier than it is with a conventional, meaning you don't have to have an appraisal, you don't have to send in pay stubs, bank statements. There's a lot less documentation. It's a lot easier to qualify for an FHA streamline than it is for a conventional loan. Another great aspect is that with FHA, there actually is more affordability because of the debt to income ratio. Allow on an FHA loan, you can typically get approved for much higher of a sales price, sometimes $75,000 all the way up to $140,000. So gives you a lot more purchasing power with an FHA loan. Now this is a full documentation loan. There's no stated income or anything like that. So they're verifying everything on the FHA loan. Sometimes the debt to income ratio just allows a lot more latitude, especially for a first-time home buyer and other things like that. So it's a great thing. With the new loan level pricing adjustments on conventional, we're noticing that the conventional rates are going up a lot higher because of the debt to income ratio requirement being under 40, because of the new loan level pricing adjustments to the interest rate. So the interest rate on the conventional loan seems to be a bit higher right now, whereas FHA is still pretty low. So it's something that you're going to want to take a look at. Once again, my name is David Krasinski with DK Home Loans. Here's all my contact information. If there's anything I can do to assist you, please feel free to reach out to me and have a great day. Thanks.